Using the state-of-the-art crypto technology, this could be perhaps the greatest revolution in financial technology since the birth of the internet itself.
Imagine the United States not just dabbling in crypto, but officially moving its entire financial system on-chain. We're talking trillions of dollars ready to flood into Bitcoin, Ethereum, and beyond. The question is, if you had just $1,000 to invest today, how would you play this once-in-a-generation revolution? Stay with me, because by the end of this video, you'll know exactly how I'd do it.
Today, I'm announcing the launch of Project Crypto to enable America's financial markets to move on-chain.
Washington is finally rolling out the Clarity Act, removing the chains that kept banks, Fortune 500 companies, and even governments from diving into crypto.
This piece of legislation is going to make America the crypto capital of the world.
We do believe the bill will be passed within the next 60 days. And this is further clarification. The Genius Act gave us clarity on stablecoins. This new bill will give us clarity on much more within the general world of crypto.
Just like the gold ETF unlocked an avalanche of demand back in 2004, the Bitcoin ETF approval in 2024 has already triggered massive inflows. The next wave? Even bigger.
So last year, ETFs bought 500,000 Bitcoin. Again, remember, the Bitcoin network only produced 165,000 Bitcoin. So it bought 3 times the total supply. Corporations bought 250,000 Bitcoin. Governments, I think this year could buy a couple 100,000 Bitcoin. So I think if you look at those 3 sources, I think they'll buy more than 1 million Bitcoin this year. And where is it going to come from? The only place it can come from is people who already hold Bitcoin. The only way they will sell is if the price goes up. That's why I'm so bullish on them.
The very first place I'll put my money is Bitcoin, $400 or 40% of the portfolio. Why? Because Bitcoin is digital gold.
Bitcoin is digital gold. We believe it's in the best interest of the United States to garner as much as we can possibly get.
Businesses, ETFs, even governments are absorbing supply faster than miners can produce it. The only way this equation balances? The price goes higher.
Again, provides the rules that the traditional finance industry, banks, insurance companies, credit card companies, as well as the Fortune 500 generally, need to know that they're able to engage in this marketplace. They know what they're allowed to do, how they're allowed to do it, how they have to disclose it and report it, and pay taxes on it. And this is going to unleash the burdens that have kept everybody out of the marketplace. The result of all this, you're going to see hundreds of millions, probably hundreds of billions of dollars, perhaps even trillions of dollars flowing into Bitcoin and other digital assets.
Next up, Ethereum. I'll put $200 here. If Bitcoin is digital gold, Ethereum is the decentralized app store.
Stablecoins, DeFi, tokenized assets. All roads lead back to Ethereum. Wall Street is literally choosing ETH as the rails for the financial system. That's like owning internet infrastructure in the 90s.
Ethereum differs from Bitcoin. Actually, Ethereum was initially a fork of Bitcoin, by the way, but with an added feature, which is smart contracts. So what they wanted to do on Ethereum was to say, let's use blockchain technology not just to store value, but now to store information. Ethereum is as a smart contract platform actually also has something called the EVM, Ethereum Virtual Machine. So you can run entire programs and conditional contracts on Ethereum. And Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception. It's one of the few blockchains that has never been down.
Now, I'm also betting $100 on Solana. Think of it as the Apple of blockchains. Faster, cheaper, and cleaner user experience.
Ethereum may dominate stablecoins, but Solana is crushing it in real-world asset tokenization. The Silicon Valley smart money sees it, and so should you.
Here's where it gets exciting. With $200, I'd spread across Made in America and DeFi coins. Think XRP, Chainlink, Cardano, Hyperliquid, and Ando.
These are building the plumbing for the new system. Bank rails, cross-chain standards, Bitcoin DeFi, tokenization. When regulation clarity hits, these projects could explode.
Ripple actually was the second largest coin prior to the SEC's investigation of them. They did this really weird lawsuit against them, and basically the Ripple's going to be the track that everything's going to be running on in the future. So they created their own stable coin right now.
Okay.
And Bank of America, like I said, they were doing 100% of their internal transactions.
Chainlink is DeFi infrastructure. Chainlink is the set of standards and the infrastructure and services that allow you to build reliable stable coins that allow you to move those stable coins reliably across chains.
Finally, with my last $100, I'd swing for the fences. AI coins like BitInsert, Layer 2s like COTI, or newer infrastructure like Supra.
Yes, high risk. Yes, speculative. But this is the part of the portfolio designed for asymmetric gains, where one 10x can change your whole outcome.
So that's how I'll invest $1,000 today.
$400 Bitcoin, $200 Ethereum, $100 Solana,
$200 DeFi plus Made in America basket, $100 Moonshots. Remember, I'm not a financial advisor. I'm just showing you what I'm doing and why.
But if you believe crypto is the next internet, then even small moves today could change your financial future forever. Comment below how you'd invest your $1,000.
And don't forget to subscribe, because the next time Bitcoin, ETH, or Solana makes a major move, you'll want to hear it first. Web3 and blockchain are becoming the new financial internet. The only question left, will you claim your piece?